Hello, everyone, and welcome to the first bonus episode. I thought it wouldn't hurt to kind of do a brain dump over the course of a few more episodes of all the practical money knowledge that I have, which honestly, objectively, is not a lot. I'm not a finance bro and I cannot explain crypto for shit, but the knowledge I'm going to share is knowledge that I've had to go out and take the time to collect for myself in the past several years. And having this knowledge helped me feel really good about managing my own finances, and I want everyone else to be able to feel that too. These are things I think everyone should know about, but unfortunately not everyone does, just because our education system has failed us and the government benefits from you not knowing these things, so why would they teach it to us in public schools? LOL. But worry not, I am a reverse gatekeep girl. You are going to hear this even if against your will. So we're going to start out with credit cards, and later in this episode, I'm going to reveal which credit cards I personally have, the specific reasons I signed up for them, and I'm also going to give you some tips on how to pick a good credit card. So let's start out with a little bit of a preface. A lot of people are scared of credit cards, right? I feel like a lot of people are told, stay away from credit cards, they're evil. But little do these people know, credit cards, when leveraged accordingly, are a great tool for you to add to your personal financial portfolio. And when used correctly, you'll actually have more money in your pocket than you started out with. Let's start from ground zero and define credit for those who don't know. It's basically a quantified measurement of how good you are with returning money that you borrowed, how trustworthy you are. And that sounds a little vague, but when you open a credit card, you have a line of credit, say $1,000. That $1,000 is not yours, but you are allowed to spend it. But the catch is, at the end of every month, you have to pay it all back. Because if you don't, there will be consequences. Specifically in the form of a lower credit score and or getting charged ridiculously high interest rates. Now, I've heard a lot of people describe credit as buy now, pay later, and that already is a really bad way of thinking about it. Yes, you buy now, but some people seem to think the pay later is much, much later. But it's not. It more accurately is buy now, pay in like 2 weeks when your statement comes. So you better have the money in a matter of weeks. So the one cardinal rule that I implore you to follow when it comes to credit cards is do not spend money you don't already have, so that you are able to pay off your entire credit card balance every single month. Do not do minimum payments. I know it's tempting, but if your credit limit is $1,000 and you only have $500 to your name, don't fucking spend more than $500. Don't do it unless it's an absolute dire emergency. And I'm talking like you need to pay a kidnapping ransom, or you're stranded in the middle of nowhere and you have to buy your way home. And the reason it's that serious is because the interest rates on credit cards are fucking insane. So with other types of loans, right? Like for example, if you want to buy a house right now, annual mortgage rates are averaging around 7%. If we're looking at student loans from personal experience, I've seen 3 to 6%. Let's say you have $100,000 in student loans. God forbid, I'm so sorry if you do. 3% of that is $3,000 in 1 year. And if you don't touch it for another year, that's going to be another 3%. You're screwed. You know what the rates on credit cards are? They are closer to 25%. Do you know how insane 25% is? There is literally no reason to abuse your credit card like that, and some people do. And I get it. Sometimes shit happens and you need money. So you look at your credit limit and it feels like that's your money, but it's not your money. I promise there are better ways to go about covering your ass in an emergency, and I'm going to talk about them in the following episodes, so stay tuned. I think where a lot of people fuck up with their credit cards is they see it as their money, when they should really be looking at it more like it's a loan. Once you understand that, the world of credit cards is boundless. Now, the really cool thing about credit cards is that because there are so many options out there, many credit card companies offer a lot of sign-up incentives. Sometimes they give you several $100s just to sign up. Why? Well, because they know people fuck up and overspend, and as soon as they fuck up, bam, 25% interest rate on your balance, motherfucker. It's over. What's really annoying is that I get so many letters in the mail from these random credit card companies that I've never heard of. And it's always like, congrats, you are pre-approved for this card. And they try to make it seem like it's some sort of congratulations-worthy feat. Like this card is so exclusive. And then when you look at what the benefits are, it's all really fucking shitty. No sign-up bonus, no cash back, a bunch of hidden fees. Don't fall for those. Recently, I just watched the show Beef on Netflix, and this isn't really a spoiler for those who haven't seen it, but there's this scene where one of the main characters, Danny, is on the phone with a bank because he's trying to buy this house. And they're explaining to him that his credit is really, really bad. And the gist of it is that he's like, well, it's not really my fault. I was just shopping at Banana Republic and all of a sudden I had a credit card. Like, and that scene kind of stood out to me. I mean, it was funny, but also sadly realistic because a lot of people are roped into signing up for these store-specific credit cards, which are a huge scam, by the way, unless you like shop there every day religiously. And even then, rarely, if ever, do these store-specific credit cards actually have worthwhile benefits, okay? Most of the time, if the credit card people approach you first, it's not a good deal. Don't take it, because even if you open the card and don't use it, there could be hidden fees, and regardless, opening a credit card will affect your credit score. So just don't in these cases, especially if it's not purposeful, if it's not intentional. So let's talk about the more fun parts, which are the incentives. Two main incentives, the first of which are sign-up bonuses. Some cards might give you the money right away after signing up, but most of the time they'll give you money after you spend a certain amount of money on that card within a certain time period. So like for example, they'll say spend $1,000 in the first 3 months and get a $200 sign-up bonus. The second main incentive that credit cards offer is cash back. For those who don't know, cash back is literally just free money. So let's say you sign up for a card that gives you 3% back on gas. That means if you spend $100 on gas, you get $3 for free. Now imagine how many times you have to get gas and how much money you can earn by just getting some gas. I've seen cashback offered for pretty much everything: groceries, streaming services, shopping at Amazon, shopping at Walmart. Believe it or not, there are some cards that will give you cashback for every single purchase that you make. Unfortunately, cashback is usually restricted to purchases, not like rent or bill payments or loan payments or money transfers to friends. But if that restriction weren't there, I think the world would be a better place. So in terms of how to choose a good credit card, there are a few things to look out for. First, you should take a look at your expenditures. What are your top spending categories aside from your bills? For most people, it might be groceries and gas, or depending on your living circumstances, it could be online shopping, or it could pretty much be all over the place. If your top spending categories are groceries and gas, you should look for a card with good cash back on groceries and gas. What is good, you may ask? I don't have a definite answer for you, but in my research, I would say anywhere between 3 to 6% is good. 3 is good, 6 is good. 2 is bad, okay? Don't settle for 2. If you like to eat out, find a card with good cash back on dining out. If your purchases are kind of everywhere and you just like to shop at random stores, you might benefit from a cash back on everything type of card. Unfortunately, with these, because the categories aren't defined, the cash back tends to be lower. Like, I have a 2% back on everything card, but I would take that 2% over using my debit card and getting 0% back any day. And as for how you find out what credit cards have what benefits, it's as easy as a Google search or even a YouTube video. Like if you search up top 5 credit cards for 20-year-olds, top 5 credit cards for college students, there are so many videos out there on people's opinions, and a lot of them are really legit. There are also these websites like Credit Karma and NerdWallet that list credit cards and summarize their benefits and compare them to each other. The idea is don't sign up for any random credit card just because, okay? Don't do it. Do the research so you can find what credit cards are the best fit for you. So if you're a beginner with credit cards, I would specifically recommend not getting one with an annual fee or any other hidden fees. Some cards have really good benefits, but the catch is that there's like a $95 annual fee or something. Now, the only time this is justified is if you think the cash back that you can earn will easily outweigh that fee based on your expenses. Now, I'm going to tell you about the credit cards that I have. I have a total of 5 credit cards, and I'm going to list them in the order that I signed up for them and explain a little bit on the reasoning on why I signed up for them. So number 1 is the Bank of America Cash Rewards card. This was my first ever credit card that I got when I turned 18, and this was pretty much just to establish my line of credit. When you turn 18, it's a good idea to open up a line of credit, assuming you're responsible about it, just because the age of your credit also impacts your score. So when it's time to buy a house, presumably sometime in your late 20s or in your 30s, you'll have a pretty long credit history and therefore a higher score. Now, this card actually came with a sign-up bonus, which was $200 after you spend $1,000 in the first couple months or something like that. But at the time when I was 18, I didn't have $1,000 to spend. I didn't have money to spend like that. And so while it sucked missing out on that sign-up bonus, I'm glad I didn't spend money that I didn't have, because I wouldn't have been able to pay that back in time. The cool thing about this card is that they have a 3% cash back on a category of your choice. 3 that I remember off the top of my head are gas, online shopping, and dining out. I believe there are a few more, but these are good categories, like things I and a lot of other people spend a lot of money on. You're able to change it once a month, I believe, and I have mine set on online shopping pretty much always because I have different cards that give me more than 3% cash back for gas and dining out and groceries and other categories that they offer. Number 2 is the Amazon Prime store card. So I know I was talking about not getting store specific credit cards, and I know Amazon is technically a store, but I think this is a good exception, and I'll tell you why. It's because you can get pretty much anything on Amazon. The reason I signed up for this second is because when I was younger, like 19, 20, 21, I didn't have a car. So I wasn't spending on gas. I wasn't eating out that frequently either. So online shopping was a bigger chunk of my overall expenditures. So this was a good card to get at the time. I still use Amazon a whole lot, which is a little uncomfortable to admit just because they're not the most moral company, but I'll admit it. Amazon is really convenient and I rely on it a lot, especially because I'm so busy, and honestly it is nice not having to wait so long or go to the store physically for something I need. I pay for Prime, and I think this card actually requires you to have a Prime membership. So in a way, this card's annual fee is the cost of the Amazon Prime membership. Prime membership is $139. It is cheaper if you're a student. The benefit of the card is 5% back on all purchases, which was a really enticing number for me. It's pretty high, and the cool thing is that you're not limited by a category. It's literally just, you want an air fryer? Cool, cash back. You want a hair straightener? Cool, cash back. And with the amount that I actually buy stuff on Amazon, I am actually able to get enough cash back to pay for the Prime membership and then more. So for me, this card is worth it. I like the 2-day shipping that basically pays for itself, although I don't think they do that anymore, but I liked it when it was still a thing. And there is a welcome bonus too of, I believe, $200. Always look for a card that has a fat welcome bonus. 200 is the minimum that you should look for, in my opinion. And with this card, if you, for some reason, end your Prime membership, you can keep the card. It still works like a credit card and everything, but I just believe that you don't get the 5% back anymore. So the next card that I signed up for, card number 3, was the Chase Freedom Flex card. So I actually really love Chase. They have a whole bunch of really awesome cards. So for the Chase Freedom Flex, there is a $200 welcome bonus after you spend $500 in the first 3 months, which is like nothing. That's like groceries for a month or so. I like Chase because from what I've seen, they make it pretty easy to get the welcome bonus. I signed up for this card because I was moving out of my parents' house and I would be making a lot of grocery purchases specifically. And the first year you join, you get 5% back on groceries. And here's what's really cool. This card also has quarterly rotating categories. So like, for example, January through March, it'll be like Target and PayPal, you get 5% back. And then April, June, it'll be something else. If groceries happens to be one of the rotating categories within that first year, you get compound cash back. 5% from the rotating category cashback and 5% from that first year bonus, you actually get 9% back. It's not 10, which would be pretty cool, but still, 9 is insanely good, especially for groceries, something you have to get super often. Also, you get 3% back on dining whenever, which is great because I like to eat out. In my opinion, you really only need one card with rotating categories unless you really want to have multiple for one reason or another. But I think it's just too much work to keep track of more than one, and you also want to make sure your expenditures aren't spread out across too many different cards, because sometimes it's better to rack up a whole bunch of points on one card if one card has especially enticing redemption options like cheaper flight tickets or something like that. You really don't want it to take forever to get enough points to buy one ticket because you have a million credit cards. But yeah, the Chase Freedom Flex is a good one. It holds a special place in my heart because it was this card that got me free flights to Mexico and back. It was pretty much my first trip that I ever planned. I actually have a referral link in the description to sign up for this card. Highly recommend. The next card that I signed up for was the Wells Fargo Active Cash. This card gives you 2% back on all purchases. The reason I signed up for this card was because I was getting cash back on almost everything. I had 5% back on groceries, 3% back on dining, 3% back on online shopping, 5% on Amazon, but I did not have a credit card to use when I went to the craft store or the dollar store. You get the idea. Pretty much non-dining, non-grocery, non-online stores weren't covered yet by one of my cards. So I was like 2% back for everything. That's a pretty good fail-safe to make sure no matter where I go, as long as they take credit cards, I can get some cash back. Some of my other cards have 1% back on all miscellaneous purchases, but 2 is better than 1. So this is pretty much my fallback card. I also at this time wanted to purchase a $1,000 online course, and it just so happened that the welcome bonus requirement was spending $1,000 within a certain time frame. And I was like, hey, this is a huge purchase. How often am I going to spend $1,000 all at once? So it was kind of perfect timing. One thing to note is that if I didn't intend to buy the online course, I probably would have held off on signing up for a fourth card. But it lined up in that I wanted to sign up for a course and sign up for a new credit card around the same time. The last card that I signed up for was the American Express Cash Preferred card. I have a referral link for this as well. It just so happens that my favorite 2 credit cards have referral links. That worked out. So this one actually does have an annual fee of $95, but that's pretty much the only con. But let me explain why I needed another card, okay? So for the first year that I had my Chase Freedom Flex card, I was getting at least 5% back on groceries, minus that 1 quarter that I was getting 9% from the compounded interest. After that first year, I actually forgot that I wouldn't be getting grocery cash back anymore, and I went in there and checked, and it said I was getting 1% on groceries for like the past 3 months, and I was like, oh my god, what the heck, I totally forgot. Now, groceries are my biggest monthly expense aside from rent, of course, so I needed better than 1%. So I was on the hunt for a different card, and I found, get this, the Amex Cash Preferred has 6% back on groceries, 6% on streaming, and 3% on gas. So the downside was the $95 annual fee, right? But I actually did the calculations on what I thought I'd spend in a year on groceries, and it basically equated to 4% back on groceries if the card didn't have an annual fee, and that's still a pretty good number. It also had a $300 welcome bonus, which is higher than a lot of other cards, so I was pretty much sold. So those are my 5 cards, and you've seen that they all had a purpose and the timing was right. None of these were random and just because. Bank of America, first card when I was 18, set to get 3% back on all online shopping since that was my greatest expense at that age. Amazon, 5% back on everything and a Prime membership that paid for itself. College students tend to buy a lot on Amazon. Chase moved out, got 9%, then 5% on groceries. 3% on dining. Wells Fargo wanted to cover my other spend categories and also wanted to make a big purchase. Amex, 6% back on groceries, 3% back on gas. I just started driving like a year or 2 ago, so I started spending money on gas pretty recently. So yeah, if you're going to get anything from this, it's that timing matters. I would suggest waiting for a specific life event, turning 18 or going to college for the first time and you're going to start paying for your own food, or getting a new car and you're going to start paying for gas, or you're about to move out from your parents' house for the first time and you need to buy a whole bunch of furniture. It doesn't have to be a life event. It can even be something like you've been saving up for concert tickets for a while and you're finally going to make that purchase. You want to make it as easy as possible for yourself to get those welcome bonuses, so timing is really, really important. The only time you're not really supposed to apply for a new card, I believe, is before you try to buy a house, because your credit score can take a little hit every time you open a new line of credit, because they're making what's called a hard inquiry, and that can knock you down a few points. It's good to sign up for your first credit card sooner rather than later, just because credit age has a larger impact than what a lot of people think on your score. This is also the same reason why you don't want to close your super old credit card either, even if you don't use it, because it'll shorten your credit age and bring your score down. The only exception is, I guess, if you have a fee on that card and you're being charged that fee and you're not using that card. In that case, you're getting ripped off and you might as well just close it. A lot of people don't have credit cards. It honestly hurts me when I'm out with a friend and it's time to split the bill and they put down their debit card. Like, bro, we are dining. You could get cash back. What are you doing? But then again, sometimes I think it is wiser to not utilize a credit card if you know you can't trust yourself to use it correctly. I have definitely known some people with really, really bad spending habits, and in those cases, it's better to just be safe than sorry, at least until better habits are developed. But if you don't have a history of bad financial habits and you think you can hold yourself accountable and pay off your credit card in full every month, I would encourage you to sign up for and use those credit cards. Cash back, free flights, free hotel stays. That could be yours.